Matthias.
Hello.
Yes, not the same one Matthias, the different one Matthias, because at Tradimo we have got two Matthias. And the other guy, he will attend next week. And today we have got Matthias, and you're responsible for
The premium community and marketing, basically,
marketing and premium community.
and,
Very good.
and for our trading account.
Okay, yeah. Okay, sounds great. Sounds great. Yes, this is also a very important point. You're also trading the real money account, yeah, at Tradimo.
Yes, together with the other Matthias, so it's easy to know it.
Yes, very good. Okay, today we have got also a very interesting topic, the gap trading strategy. Do you also use this trading strategy for your trading?
I have used it earlier, but then, if you trade a little bit longer, you maybe develop your own strategies, and
Of course.
that's why I do not use it anymore. But it's good to start because it has a clear rule set to follow.
Yes, yes, you're absolutely right. Okay, for everyone, just during the webinar, use the chat screen. If you've got questions, we will answer your questions as soon as possible. After the webinar, we will show you the email address where you can contact us anytime. So, before we start, of course, we have to satisfy our compliance guys with a risk disclaimer, so we don't take any liabilities in any cases. And if you have got questions in these ways, also you can contact us via our email address, and yes, we will answer then as soon as possible. Yes, today we have got the gap trading strategy. The gap trading strategy is also available on our course page, and what we are showing today is only just a small part of the course at all. But if you're interested to see the whole course, just a moment, let me copy and paste the link where you will be able to see the whole course of the gap trading strategy. Yeah, so I copied and pasted. You can see it in the chat screen. This is the whole course. And today our content will be identifying the gap and second, filling the gaps long entry. Is that okay, Matthias? I think yes, yeah?
Yes.
Okay, very good. So let's start with identifying the gap. When you look at a candlestick chart, for example, now we took here the British pound, and when you look at the candlestick chart, gap is the difference between the closing price of one candle and the opening price of the next candle. On a chart, it would look like an empty area in between the candles. You can see it here between 1 and 2, marked yellow. 1, the candle opens much lower than the previous day's close, and second, the green shaded area shows the gap in between the candles. Yeah. So everyone, for example, who wants to see is, for example, the real environment, I would recommend, for example, to download the demo version of XM. Yeah, that's a broker on Cyprus. There you will get the opportunity to have fake money on your account, but in a real environment. That means real-time trading, real-time quotes, and real-time charts. And there you can, of course, search for gaps like these in this example. So, more often than not, when a gap occurs on a price chart, the price tends to fill the gap. In other words, the price in the context of the chart above will rise at least the length of the green shaded area, what I showed you before here in this green shaded area. Important is a gap does not necessarily happen overnight when markets are closed. It could also occur on a shorter time frame during the day. Ever happened in your trading, Matthias?
That you mean an overnight gap?
Yes,
Yeah, sure,
of
but
course.
mostly not in my direction.
Okay. The biggest gap what I've seen really tomorrow we got 9/11, it was not 18 years ago. Yeah, I've seen this in the Dow Jones, a gap of over 8%. Opened with a gap of over 8%. Can you imagine?
No, not really.
Yeah. I've seen this. I've seen this live. The 9/11 was on a Tuesday. Tuesday afternoon, the market was closed. Wednesday closed, Thursday closed, Friday closed, and then on Monday, the Dow Jones opened with a gap of over 8%. Minus. Unbelievable. That was a very, really, really big gap.
Yes.
So, knowing that when a gap occurs, the price will likely fill it, we can take advantage of these opportunity using two methods. One, placing a trade to fill the gap. Second, placing a trade after the gap has been filled. What would you do, Matthias?
I think you already know the answer, but
Waiting
I
at
will.
first.
um, to be honest, when I trade it, I wait until the gap is filled. But I know that you're asking for answer number one. Place the trade to fill the gap.
Yeah, because it's only a question of time that the gap will be filled. Yeah, but then it depends on the volatility. Yeah. Okay, so in order to find this signal, we use multiple time frame analyzers. So first of all, let's go back to the daily chart used in the previous lesson where we first observed the gap. The first one is the candle opened much lower than the previous day's close. The green shaded area shows the gap in between the candles. That's the long entry. Yeah. So, and then switch to the 15-minute time frame, the gap as it appears on a 15-minute chart. It's a little bit more. And then now wait for four candles to form on the 15-minute time frame and draw a line on the highest point of the four candles, as the following chart shows. Four candles from a 15-minute time frame. First, it's yellow marked, and second, the horizontal line highlighting highest point of four candles. Yeah, it's only an example, okay? This is very important. And then you will now wait for a candle to close above this line. The first four candles after the gap, and second, the candles closes above the line. This is very important, above the horizontal line. Yeah? Have you got questions, Matthias? Everything okay?
Everything okay?
Okay, good. So, and then this is your signal to place a long trade. The price breaks the high of the first four candles. We can see it on marked yellow. And then on the second, blue marked, long trade when the candle closed above the line. Also very good.
So what it means, you just enter market long.
Yes, entered market long. Correct. So this is only an example what can happen. Yeah, waiting at first for the four candles, then highlighting the horizontal line. Yeah, what you showed before, waiting for the confirmation of the price, and then the price breaks the high of the first four candles, and then you put the long trade in there. The stop loss, this is also very important. You have to work with the stop loss. That's my opinion. The stop loss is placed just below the low price of the current of the day. So that means under number one, we have got the price breaks the high of the first four candles. Number two, the long entry where we are in the market. And number three, it's marked red. Stop loss placed below the low of the current day. Is that okay, Matthias?
I'm fine with that.
Yeah, okay. Because you're the trader, man.
Yes, but as I said, I'm not trading this every day.
Okay,
Just
good. Yeah,
use
yeah.
filled gaps to
Yes,
trade sometimes
yes.
when I have a real opinion about the market direction.
For everyone who wants to, for example, see really like in the real environment, really, I can say it once again. I can recommend the exam demo. Just download it. I can also copy and paste the link where you would be able to download this. One moment. Let me do this for you. Here in the chat screen on this link, you can download the demo access of exam. So now we are coming to the last page for the long entry. Yeah, the profit target is be placed just beneath the low of the prior day, the top of the gap. So the price breaks the high of the first four candles. You can see it under number one. Then second, blue mark, the long entry where we have got our open position. The three, stop loss placed below the low of the current day. It's marked red or highlighted red. And four, last but not least, take profit placed just below the low point of the prior day where the gap fills. So on. This is, for example, a long entry where you can use the gap which happened in the market. And for example, when I remember 18 years ago, where Dow Jones opened with a gap over 8%, it would work. Or this kind of strategy would work. Yeah. But it's up to you by the end. And if you've got questions, now you have got the opportunity to type in the questions in the chat screen. Yeah, because I told you before, this is only a small part of the gap trading strategy, what we want to show of the course. In the link, what I've pasted here in the chat screen, you would be able to see the whole course. Of course, the opposite side, for example, the short entry, I can tell you the content of the whole course on our Tradimo page. Let me see. Yeah, identifying the gap, what we did here, filling the gap, and after the gap is filled, advanced gap strategy, introduction into the gap trading at all. These courses are available, and this course, oh, it costs a little bit money, $19.99. But if you're a premium member, you would get a free access. Good. Yes. I told you before it was only a small part of this webinar regarding the gap trading strategy, just only the side of the long entry to identify and to go long in the market. And if you've got questions regarding this, you can contact us anytime about under this email address. So don't hesitate. If you have got questions, just write an email to us. Or if you have got questions, Matthias.
Just have two tips to mention.
Okay.
If you want to trade forex markets, for example, of course, they normally don't have real gaps. So you will only have gaps there on Mondays, basically after weekends. And the second one is if you want to trade it with indices like Nasdaq, whatever,
Mm.
you should, because they are open during the night. They only have 1 hour break. So for me, I would really take the opening course, um, so the real time trading hours, instead of the open at, I guess, when are they opening again, at 12 at night or something
Mm.
like that. So they close at 11 and open at 12, so there won't be a real gap. You just take the real close at 10 p.m. and open at 15:30 a.m. the next day.
Mm. Very, very important information because in my time, I'm coming from the future side. I was educated at the future market. So my first markets, you won't believe that was the coffee, sugar, and cocoa exchange. So I traded my first future market was coffee. I traded with coffee, and I can remember it very, very good. Market opened our time, Central European time, at 3:30 p.m. and closed at 10 p.m. And in South America, a climate change affected on the output of the coffee, and the market opened with a gap on the next day with, I think, 4% or 5%. So what I wanted to tell is the gaps, or the effect of or the effect of a gap is very, very rare. So comparing to the time 15 or 20 years ago, we got every time a lot of gaps on the next days because market closed, closed and then opened on the next days. And today, now we are trading with markets, they're trading 24 hours. Yeah, like Forex, like CFDs, for example. It's very, very rare.
Yeah, I need to take care which markets you're looking at and which times you're looking at. I mean, commodities market, they still have gaps every
Yes,
day, like
yes,
illiquid markets, especially as lumber, for example, had
yes,
a, I don't know, 3.5% gap today, or
yeah. Yeah, also, you're
18
absolutely
points.
right. In commodities, we see a lot of gaps. Yeah,
Mm,
but I can really, from my side, I can only tell, don't leave, for example, if you're trading Forex or so, don't leave positions over the weekend, for example. That's my opinion. Yeah, because you don't even know what happened over the weekend. Yeah, and you got Saturday and Sunday, anything can happen. Yeah. And then you got a bad surprise on Sunday night or Monday morning.
Exactly.
Yeah. So it's only a tip, not a recommendation, but a tip. Yeah. And for example, with commodities, from my personal point of view, um, I don't like it to have open positions overnight. Because I'm a man, I want to sleep well. And not to think about my money or about my open positions because anything can happen. But it's up to you. Yeah, we got day traders, we got position traders. If you trade positions and hedges this with other positions, it's up to you. It depends everything on the trading strategy. My own trading strategy was not to hold open positions overnight. That was my rule number one. My personal rule. Not yours, yeah, Matthias?
Just wanted to say, sounds really pussy to me, but okay.
Okay,
No,
good.
it's okay.
Yeah, unfortunately, we came to the end of the webinar. So if you have good questions, yeah, contact us anytime. Our support at tradimo.com. And I would appreciate after the webinar if you can spend 1 or 2 minutes to rate this webinar from today, and if that's bad or good, and just send also us suggestions for topics what you're interested for. And yes, on our webpage, Tradimo, you will see the next schedules for our next webinars with very interesting topics. And I would be very, very happy to see you, or to see you once again. Thanks, Matthias.
No, thank you.
Thank you. Okay, have a nice evening, and take care. Yeah.
Have
Okay.
a nice evening.
Bye.
Bye bye.